morning, traders. It is Wednesday, the 2nd of December, 2015. It's 7:04 a.m. Chicago time. This broadcast is pre-recorded. We're an hour early. I have an obligation to take my kids to school this morning, and therefore have had to record this ahead of time. So, not sure how effective it is for you, since there is about an hour and a half till the open, and a lot can happen in that time. But we'll go over how things are setting up. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The news overnight. The elephant in the room is the ISM, or Institute of Supply Management's manufacturing index came in yesterday after the open, and that number came in at 48.6, which is below 50. This is in contractionary territory. We had a quick drop, and I'll show you that in a minute. We had a quick drop on that release, but this is the first time this number has been this low since June of 2009, and the market brushed it off and has rallied from there. It did cause a big rotation down, but the market just did not care. Again, this is the lowest it's been since June 2009. The other number that came out was markets manufacturing PMI, which also dropped to 52.8. And I want to note that that's the lowest it's been in 25 months. So there's some cracks in a foundation here, it seems, from a fundamental perspective. Yesterday at about 7 p.m. Central, Fed Governor Brainard, a voting dove, says there needs to be a gradual and cautious approach to policy adjustment, and he supports pushing back, or I can't imagine they're going to raise rates more slowly than they have been, but he's still pushing for a very slow and gradual increase. Overnight, UK November construction PMI. UK November construction PMI came in at 55.3 versus 58.5. This is the 33rd month of expansion, but a 7-month low for that number. The Eurozone November advanced CPI estimate came in surprisingly at 0.1 versus 0.2, missing its mark. CPI core 0.9 versus 1.1 prior. Again, more room for stimulus with the ECB tomorrow. Want to keep an eye on that. Let's take a look at what's expected for today. So looking ahead, in about 8 minutes, we have ADP employment. ADP is a payroll processing service, and it puts out a number that precedes non-farm payrolls. It used to be a pretty close indicator of what we should expect for non-farm payrolls, but it hasn't been recently. ADP expects 190,000 for November. At 7:30, we have U.S. non-farm productivity expecting 2.2, unit labor costs expecting 1.0. Those are final numbers for the third quarter this year. At 8:45 Central, 9:45 Eastern, it's 15 minutes after the cash open, we're getting ISM New York expecting 58. Canada issues its rate decision at 9 o'clock Central, 10 Eastern. They're expected at 0.5, holding steady. And then at 9:30 Central, 10:30 Eastern, we're looking for DOE U.S. gasoline inventories at 1.55 million, crude oil inventories at negative 900,000, distillate inventories at positive 500,000. As far as speakers, we have Fed Speaker Lockhart right now. We have Yellen at 7:30 Central, 8:30 Eastern. We have Tarullo at 8 Central, 9 Eastern. We have Yellen again at 11:25 Central, 12:25 Eastern. And then we have the Fed's beige book at 1 Central, 2 Eastern. And then finally at 3:40, at 2:40 Central, 3:40 Eastern, we have Fed Speaker Williams, who's a voter leaning dove. That's a Fed parade today. We're getting a Fed parade. Now, here's how this is setting up. We have the Fed speakers today, beige book and so on. Then we have the big ECB release. The market's really expecting the ECB to do something tomorrow. Um, and the euro's at 1.06. And then we have the ECB doing its thing. We have the conference at 7:30 tomorrow, 7:30 Central, 8:30 Eastern, and on Friday we have non-farm payroll. So there's a lot getting stacked up together into the end of the week. I want to also remind you that tomorrow at about 10 o'clock, I'll send the invite out. There will be a webinar on part two of the order flow and stocking trades, where we'll take some real-time trades. And then other than that, let's look at how things are setting up from yesterday. Here's what was expected. Here's what this is from yesterday's video. You can see it here at the corner. It says 1201 trader bite. And here's what was expected. The market was expected to push up or push down. Seems like, okay, well, what else could it do? But there was an equal chance. But the primary hypothesis was for this to do what's shown in the video here, pull back. It did not pull back down far enough. It held this 84 quarter LVN, and then it pushed up from there. And the expectation is for it to get to 2110 next. That's the trend. That's the general trend. We're staying above the MCV which was the 2080-50. So that's what I showed yesterday, and that's basically what the market did. So as we look at how things shook out yesterday, we had a pretty quiet open. And we saw initiative buying. We just could not get back down. And the initiative buying that happened here was very difficult to catch. But it gives us a very important clue. The idea here is to buy the pullbacks, since somebody, a large participant is moving away from value and is not retesting value. And therefore, the expectation is for it to continue higher. However, ISM came out. ISM came out right here, and the market dropped 9 points, which then set up the idea that, okay, well, we're going to likely test the point of control the prior day. So look to sell against key levels, look for it to rotate down and complete this move. And that didn't happen either. So pretty difficult trade yesterday, very, very choppy in here. It spent most of the session just chopping around, and then finally it breaks through and goes for those new highs. It pushes to 2100. Note the large volume traded at 2100 right at the price. That is a hedge. This is a key level here. It traded 50,000 contracts at that price. As you can see, 50,000 with a point of control of 51,000. It very, very closely was almost able to shift the point of control right into the last 2 15-minute bars. Almost shifted the point of control for the entire day. There was a lot that went off here, and it looked like a hedge. It happened very quickly. So you can see the volume on the last 15-minute bars were not unusual, but that volume did not occur over the range of the bar. A lot of it occurred, a significant amount of it occurred right on one price. So that's just a screaming that there's a hedge there. As far as I'm running out of time here. As far as what's expected for today, the overnight session shows that we continued our push higher. Let's shift this over. The overnight session has a pretty balanced profile with a shift higher, a double distribution profile, and has retested. So this morning, it looks like we still have an hour and 15 minutes, so a lot can happen. So these hypotheses are very, very, very early. But overall, this is showing that the market's likely to open out of range again. The expectation is the same, responsive selling to some point, probably to this value high point of IB high area, and then I expect it to continue on its merry way to 2110, which is the most recent high. 2110 is the key area. So now we have a long-term or bigger time frame week high as we push towards the 2110 and then above there 2117. That's the expectation, is to pull back, chop around this morning. There's a lot on deck today as far as speakers and numbers and so on, but the expectation is for this to continue. The buyers were clearly in control yesterday. On that drop on ISM, you could see this bar here. This is really an excess low. It pushed down, and there's the delta. As far it came down, but it finished positive on a negative bar. The market just didn't just like that price. It liked this area and it bought a lot of it. So this was an excess low with a good taper, very solid low yesterday. We were talking about it in the chat room. We were saying, and the argument was that we have a lot more supporting a break higher. This was at about 12:30 right in here. A lot more supports a break higher and a break of the IB high than the IB low, and that's what it ended up doing. Anyway, that's all I have for you for today. I'm going to leave you with that. Again, I want to remind you, on Thursday we do have the convergence event on order flow reading and stocking trades. I'm going to set up a couple of trades, or one trade at least, and take it live. Hopefully you'll enjoy that. Take care.